South Africa's banking industry has always been run by the same big names. For decades, the so-called Big Four were untouchable. But then came Capitec, a small newcomer from Stellenbosch, with no real legacy, no big name behind it, just a bold idea. Fast forward 20 years, and Capitec is now South Africa's largest bank by customer numbers, over 24 million clients. That's more than double any of the usual names. And recently, it became the most valuable bank on the JSE. So how did this happen? How did a scrappy microlender become a banking juggernaut? In this video, we look at how a mix of smart leadership, radical simplicity, and a forgotten customer base helped build South Africa's most unlikely banking success story. The year was 2001. 4 major banks controlled South Africa's financial landscape, and most people assumed that's just the way it was. High fees, complex forms, short hours. If you were wealthy and middle class, you had options. But if you were working class, especially living in a township or rural areas or on the Cape Flats, you were mostly invisible. That's where Capitec came in. It started small, a modest operation out of Stellenbosch, led by Michael Leroux, Rian Stassen and a few others. At the time, it was dismissed as a fly-by-night microlender, just another fringe player trying to do what the big banks already did. But Capitec wasn't trying to copy the old model, it was trying to replace it. The idea was simple, one account for everyone. No premium tiers, no hidden charges, just low fees, solid interest on savings, and branches that opened earlier, stayed open later, even on Saturdays. A shock in an industry where closing at 3 p.m. was standard practice. They weren't waiting for customers to come to them either. In the mid-2000s, Capitec took its services directly into townships, using Toyota Tazas as mobile branches. One team even carried a computer in a metal suitcase, famously called the Tasman, that suitcase man in Afrikaans, to open accounts on the spot. Taxi ranks, small towns, farm villages, wherever people were, Capitec showed up. This wasn't high-tech banking, it was human-first banking, stripped down to essentials, fast, friendly, and accessible. And it worked. In 2009, Capitec became the first bank in South Africa to introduce biometric fingerprint scanning, making identity verification faster and safer. By 2010, the bank had already reached 2 million clients, still tiny compared to the giants, but something was shifting. People were starting to believe. In the years following the 2008 financial crisis, South Africa's economy began to shift, and so did its customers. Frustrated by rising fees, poor service, and banks that felt out of touch, people started looking for alternatives, and Capitec offered exactly that. While traditional banks charged customers for everything, monthly account fees, ATM charges, even SMS notifications, Capitec kept things simple. Transparent pricing, no hidden costs, one account, one low fee, and that model resonated with South Africans, especially in townships, where access to financial services had always come with a catch. Through the 2010s, Capitec's customer base exploded. It didn't try to win over the elite. It focused on salaried workers, grant recipients, and small business owners. People who wanted fast, affordable banking they could trust. No paperwork hurdles, just an ID, a friendly face, and an account you could open in minutes. By 2024, Capitec had already signed up over 22 million active clients, more than double the next largest bank. The so-called Big Four, Standard Bank, Absa, FNB, and Nedbank, each had fewer than 10 million customers. Capitec had quietly become bigger than all of them. This wasn't just growth, it was a takeover. So what made this possible? One answer is cost efficiency. Capitec runs lean. It doesn't carry bloated IT systems or complex corporate hierarchies. Its cost-to-income ratio sits around 40%, compared to the 53% average of its competitors. That efficiency allows it to keep fees low while still reinvesting in tech, people, and growth. And then there's agility. Capitec embraced digital channels early, pushing mobile banking via USSD and launching a sleek app long before others caught on. Today it has over 11 million app users, many from low-income households who previously had no access to digital banking. Capitec also thought differently about its role. In recent years, it launched Capitec Connect, a mobile virtual network that offers affordable data and airtime. It's no longer just a bank, it's becoming a platform, one where clients can manage money, communicate, and even shop, all within the Capitec ecosystem. But above all, Capitec built something banks struggle to manufacture: trust. It spoke to ordinary South Africans, not in corporate jargon, but in plain language. Its branches didn't have bulletproof glass and marble counters. They had open plan layouts and warm greetings, and that mattered. And of course, there were doubters. For years, critics called Capitec a loan shark in disguise, pointing to its reliance on unsecured lending. Then in 2018, the doubters got louder. A US-based short seller, Viceroy Research, published a scathing report. It accused Capitec of reckless lending and even recommended the Reserve Bank place it under curatorship. Headlines exploded and investors panicked, but when regulators reviewed Capitec's books, they found no wrongdoing. In fact, they affirmed the bank's financial health. The Financial Sector Conduct Authority later fined Viceroy for false claims. Capitec didn't just survive the crisis, it came out stronger. In 2024, the share price grew nearly 60% in a single year. Its market cap crossed 400 billion rand in 2025, surpassing First Rand and Standard Bank to become the most valuable bank in South Africa. From the smallest player in 2017 to the biggest in just 8 years. For the year ended February 2025, the numbers are staggering. Return on equity improved to 29%, far above industry averages. They achieved a 30% growth in headline earnings year on year, and over half of South Africa's adult population now banks with Capitec. It's become the go-to account for salaries, bills, and savings in millions of homes. From a tiny startup once laughed off as a fly-by-night, Capitec is now the center of gravity in South African banking. Not because it outspent its rivals, but because it outserved them. So how did Capitec win in an industry dominated with players with more resources and longer histories? The formula was simple but powerful: accessibility, affordability, and innovation. Capitec identified a market most banks had overlooked: millions of working class and low-income South Africans. And instead of offering watered-down versions of traditional products, it built something from the ground up. Accounts with low fees, credit products that made sense, a savings culture that rewarded consistency, services that worked, whether on a smartphone, at a branch, or even through WhatsApp. And as customers' lives evolved, so did the bank. What began with savings and loans expanded to include transactional accounts, credit cards, insurance, and now even business banking for small enterprises. Always with the same ethos: keep it simple, keep it fair. In a country where so many feel excluded by corporate institutions, Capitec made banking feel human, and that changed everything. The industry noticed, competitors scrambled to respond, slashing fees, simplifying products, and launching their own easy banking options. But by then, Capitec had already won the trust of millions. While others were adjusting, Capitec was growing. One investment manager put it bluntly: Capitec is a phenomenal company with an incredible innovative culture. The other banks are now trying to play catch up. Today, the evidence is everywhere. Walk into a township or a rural town and you'll likely find a Capitec branch, busy, efficient, trusted. Its presence in these places isn't just a sign of scale, it's a reflection of something deeper. A bank that saw value in people the industry ignored. And that's the real story. Capitec didn't succeed because it outmarketed the giants. It succeeded because it outserved them. It proved that when you understand the needs of many and build for them, you can change the rules of the game. From a fly-by-night newcomer to the most valuable bank in South Africa. From a startup in Stellenbosch to the financial backbone of a nation. Capitec's rise is more than just a business case. It's a reminder that clarity, focus, and respect for the customer still matters, and that sometimes the smartest innovation doesn't come from complexity, but from keeping things simple. And their story is not over. Capitec is still growing, they're still listening to their clients, and still building a better bank. The challenger has become the champion. Thank you for watching. See you next time.